Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30, 35, 40 minutes, I will be your host as I will be taking you on a trading journey where we shall be evaluating the financial market using our basic tools such as trend lines, key levels, and of course, chart patterns to unravel the potential trajectory of price action today, and most importantly, strategically position ourselves for the next move. Well, since the beginning of the week, we have been doing fairly well across the assets on our watch list. In fact, we have three assets we've been monitoring during the Forest Morning Mastery since the beginning of the week. We have the USOILSPOT, which hasn't really done very well as we did witness a loss on that as on the buy position we took yesterday as a result of the choppy situations in the market, which we will be deliberating on today. Then we also have the USDJPY, a newly introduced asset. Since the last 5 months, we have stopped trading that asset, but this week we decided to revisit the asset based on interesting trading setup I was able to identify during the course of the week. And in fact, I can say that the USDJPY is the most profitable asset on our watch list since the week began. So we are going to be looking at what has happened and how we will be positioning ourselves for the next move. Then finally, we are looking at the XAUUSD, my favorite asset, of course, which of course has done fairly well in the last 24 hours as well. So these are the assets we will be looking at today, and I do encourage us all to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining me for the first time, you are highly welcome on board, and I'm very excited to have you guys around with us this morning. And I know you will be wondering what this is all about. What is it that we really do during the Forex Morning Mastery? First of all, it's important to state here that I usually share a couple of videos during the course of the weekend that details how we intend to position ourselves and prepare for the new week. And of course, the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset. So during the Forex Morning Mastery, we usually run through the excuse me. So we usually run through the assets that I shared during the weekend and do follow-up details on a daily basis during the Forex Morning Mastery. And most importantly, it's very necessary you note that we only focus on the 1 hour time frame. So if you do want to have a background knowledge of these assets on how we got to the point you're seeing on the 1 hour time frame, then I encourage us to watch the videos I shared during the weekend. The links are right in the description box of this current video you are watching. And so with that in mind, we come together as a community, gather here on a daily basis, and engage in follow-ups and reviews on this particular asset in preparation for the London and the New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. And please also note that my aim here is to equip you with the knowledge and skills necessary for you to make your own independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to utilize the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to engage actively in the comment section. In the comment section, I see your comment, Torres Master, asking you want to express something. Of course, you have my contact. You can easily get in touch with me via email and discuss whatever you want to discuss with me. and thank you for that. If it's a feedback, thank you very much. So you can always get in touch with me via my my public correspondence, which is of course scrolling at the bottom of your screen, or in the description box of this current video. So with that being said, here we will be diving right into the business. And as usual, the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, on the economic calendar for this week, and based on the assets we have been monitoring, we will be focusing on high impact. We have been focusing on high impactful event from both the United States and the Japanese economic docket. And there are days when we do not have any high impactful event, so we took it a step further to include medium impact event. Now, for today, Wednesday, January 17th, we have a couple of high impactful events from the United States economic docket, but I still don't feel this is the only one we have for today. So what I will do here is to filter in and include the Japanese economy, which is excluded from this, and of course put the medium impact event, and let's see what we have for today's trading session. So if you look at this now, you can see it's more expanded right now. And the first one, which is the most important event for today, is the retail sales data. Now, for those who don't know, the retail sales data is released by the US Census Bureau on a monthly basis, and it measures the value in total receipts of retail and food stores in the United States. Now, this data here is widely followed as an indicator of consumer spending, which is a major driver of the US economy. So if there is high spending, then that means that the economy is expanding and doing very well. And when there is low spending, it shows that the economy is contracting. And of course, generally, a high reading in terms of the retail sales data suggests a healthy economy, which of course will dovetail to bullish traction in favor of the US dollar. And if the data comes in below or a low or below expectation, we expect a bearish signal on the US dollar. Now, if we look at the previous data, that is for the month of November, it came in at 0.3%. And based on what we have on ground right now, economists are projecting a 0.4% expectations for today, which of course is a sign that reveals that the economy is doing very well. So we look forward to see what the actual data is going to be on that one. Then later on today, we have some speeches coming up from key Fed officials. We have Barr, we have Bowman, and we also have Williams. And remember, yesterday we also had Waller. Christopher Waller had a speech yesterday, and one of the highlights from what he said yesterday was the fact that the interest rate cuts cannot be considered at this point in time based on the nature of the economy. So we're going to be looking at that and see how that is going to be impacting the financial market from a technical standpoint. And of course, we still look forward to these other speeches coming up later today to further give us substance to how we will be managing our positions for today. So with the information we have gathered here on the economic calendar, we shall be diving right into the business. And of course, we know that as technical traders, we do know that the anticipation of this event has a way of affecting the market sentiment in such a way that it would reflect on the chart as price action. So as usual, the first asset we will be taking on today is going to be the USOILSPOT. And on the USOILSPOT, we really did not do very well so far this week. At a point at the beginning of the week, we had a sell position which was actually triggered at the breakdown of the $72.40 area, but as you will see, price moved about 100 pips before the bullish momentum came in. And since yesterday, we noticed how price had been confined within a range here just around that descending trend line to emphasize the level of indecision. And throughout the Asian session yesterday, the inability of sellers to break down the $72.40 level was what triggered the idea that we look out for buying opportunity, especially had the breakout of that descending trend line we projected on this chart yesterday. And of course, we did have the buy position triggered, but unfortunately it did not last long as we saw price drop to the downside, taking us out of that position. The first position was in break even, but the second one went into a loss as we saw price continue to drop to the downside, breaking back down the descending trend line. And of course, we did talk about this yesterday, that if price drops below the trend line, then we are back within the seller's territory, waiting for significant structures to give us confirmations to join the bearish move to the downside. And this is what our decision was yesterday, and as it is right now, we are in no position on this particular asset. Now, going into today's trading session, how do we intend to position ourselves for the next move? Well, it's important for us to also keep tabs with what is going on behind the scenes that is causing our price to behave the way it is behaving at this point. Now, downward pressure on crude oil is attributed to the slight increase in the United States crude oil production, particularly the Permian Basin, where output rose by 5.5 thousand barrels per day to 5.9 million barrels per day, as reported by the Energy Information Administration yesterday. And the completion and expansion of the Trans Mountain pipeline in Canada is also contributing to facilitating transportation of crude oil, boosting North American crude oil output as well. Now, with Canada ranking as the fourth largest global producers of of oil barrels due to surge in production observed in November, it further gives us sign that the supply market is doing very, very well. And when the supply market is doing very well, what happens? Price drops to the downside because there is plenty of the commodity in the market. There's plenty of supply in the market. However, despite these factors that is pushing price to the downside, I still think that there are other factors too that is actually helping the oil price to stable around the $70 to $71 area in the last 24 hours. Now, remember we were talking about concerns about oil disruptions in the Red Sea as a result of the Houthi attacks on vessels. Yesterday again, we saw the U.S. Military strike again at Yemen positions to further curtail their attacks in the Red Sea, which further also trigger more concerns that we might be seeing further escalation in that region. And of course, if there is escalation, prices will definitely going to rise. And I think this is one of the reasons why price is not spiraling to the downside significantly at this point in time. Now, lastly, the strength of the US dollar lately is offsetting impact of the Red Sea concerns, affecting demand for, of course, we know the US oil is a US dollar denominated asset. And given the intricate situation, whenever the dollar rises, it becomes very expensive for those who are buying this asset using other currency, because it's very expensive to convert the US dollar to other currencies before buying that asset. So it now makes the US oil very expensive, and that obviously and technically will reduce the demand for this particular asset. So with this intricate situations we have at this point, it's very, very important for us to take significant steps to ensure that we do not jump into unnecessary position at this point. So looking at things from a technical standpoint, how do we intend to position ourselves for the next move? Well, first of all, it's very important to note that price action is back below that descending trend line we projected here yesterday. Remember, we had this descending trend line marked out, and we were actually expecting price to break out and retest the descending trend line to incite an opportunity to buy. But since price is back below the descending trend line, it's more or less back within the seller's territory at this point. And if you remember yesterday, I did mention that if I am going to be selling excuse me, I would like to see some significant confirmations like lower lows and lower highs below the descending trend line, leading to the breakdown of that support line at the $71.40 level before I could join a bearish move. And if you look at what has happened during the later part of the New York session right into the Asian session, you will see how price did drop below the descending trend line, came back to retest the structure. And in fact, if you are taking advantage of that retest of structure right there, well done and kudos to you. I was unable to take this as this whole transformation happened during the Asian session, which is in the midnight in this part of the world, so I was definitely fast asleep when this happened. So if you had capitalized on that one, well done to you. So we saw price find lower lows, lower highs in that right below the descending trend line to further emphasize some selling strength in this market. And right now price just broke down the $74.10 to incite more selling opportunities in this market. So technically I have a sell position triggered below the $71.40 level. And for those of you who are joined earlier than this, well done to you. I will encourage you to move your stop losses on that first position to break even while we see how far this bearish momentum will go. So at this point in time, we have a triggered position again right below the $71.40 area, and as long as price still remains below this descending trend line, we shall continue to maintain a bearish bias. So our stop loss on this one is going to be quite wide enough because of the uncertainty around this market. So I want to be seeing something somewhere above or around that descending trend line, which will be dovetailing to between 50 to 60 pips thereabout, depending on where you entered this trade. Now I quickly want to share something with you on the 4 hours time frame so we can have an holistic idea into what is going on in this market. Now if you look at the 4 hours time frame here, after considering the fact that price action has been bearish in the last couple of months, in the last 5 to 6 months, I think we have this ascending trend line we projected at the beginning of this week, which currently shows that price action is oscillating around it. Now if price can break down this ascending trend line, it is very likely that we are going to be seeing a massive sell-off to the downside. So we are at a very crucial juncture in this market. So I do encourage us all to exercise patience, and as soon as price moves significantly, we'll move our stop losses, secure the positions while we wait and see if we could add more positions to our existing trade. But definitely I will be giving you updates on my social media platforms to guide our decisions going forward. So at this point, we maintain a bearish bias right now since price remained below the descending trend line. Now, in as much as we are looking out for selling opportunities, we cannot ignore the potentials that buyers can still come into this market, pushing price to the upside. And in fact, if we are going to be considering buying this asset, what is it that we will need to see here that will make us change our bias from bearish to bullish? Well, looking at the structure again, there is one thing I want to share with you. It's this candle here that just broke down the $71.40 level is not cast in stone yet, as it could still turn out to be a hammer candle, bringing price back to the upside, hereby giving us something that may look like a double bottom structure, where the neckline of that double bottom structure will be somewhere around the $73 area and the $73.50 level, something like this. Breakout retest to welcome buying opportunities. So if I want to consider buying here, I would rather want to see price at least break out of that descending trend line first of all, and if possible do a retest of that structure before I want to start considering buying this asset. But trust me, I will definitely be giving you updates as at when due, if this kind of situation happens. But as it is right now, we maintain a bearish bias. Price remains below the descending trend line, and we continue to look out for more selling opportunities from here. So this is my simple view on the US All Spot for today. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see your comment, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. In the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the newly introduced asset for this week, and surprisingly we are doing very well on this asset. This asset had moved significantly well in our favor, scooping in over a minimum of, let's say, 700-800 pips on this particular asset, with over four buy positions running in profit at this point in time. And let's quickly run through how the week started for us in this community and what led to the decisions that we made at the beginning of this week. Now, the first thing we did observe here, remember I did share a video on this asset during the course of the weekend where I did a top-down analysis detailing how we will be positioning ourselves for this week's trading session, having our key level identified around the 144.800 and the 144.00 level. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to continue to look out for patterns and structures that supports the idea of buying that asset. Now, at the beginning of the week, we saw our buy pressure resume just right above our key level at the 144.800. So I'll just zoom it in so we can see things clearly. So this was our key level here, the pink line at the 144.800 area. And of course, the week began on a strong bullish note as we saw price initially, despite the bullish momentum, was confined within the 145.240 and the 144.870, just right above the key level for about 8 to 12 hours before we finally saw the breakout of that resistance line, which of course welcomed buying opportunities at that point. And we kept on looking out for more opportunities after the breakout of this level. As we said, we will be using these levels, these multiple levels here, to maximize the potential of this bullish move. So we had levels at the 145.550 to add more positions. We also had a level at the 145.800 and of course the 146.450 during yesterday's trading session. And I can remember also adding another level at the 147.400 area, which was also triggered during the Asian session today. And of course we also have another one right above the 148.200, which is prices gradually approaching that level, and I do hope that price will continue to push to the upside. So we do have a buy stop order above that structure as well to maximize this move to the upside. So it has been quite a profitable trade, and in fact, interestingly, this is our first time we'll be trading this asset for this week, and it did very, very well. And for those of you who did capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. And as it is right now, the next thing we are going to be doing is to ensure that we move all stop losses accordingly to safeguard the current buy position. And with the way things are going right now, I will suggest that above the last entry point at the 147.400 area seems most appropriate to move all stop losses to at this point. And while we move our stop losses, please let's ensure that we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? What are the chances that buyers have, and what also are the chances that sellers have? Well, this has to do with what is going on behind the scenes, of course, how our market participant reacting to the events that are churning out from both economic dockets since the beginning of this week. Now, recently, the Japanese yen is experiencing a significant downturn, plummeting to its lowest point in the last 3 months right now. And this trend is fueled by prevailing expectations that the Bank of Japan will postpone its plan to shift away from its ultra dovish stance, which of course we talked about this yesterday. That is the ultra monetary policy, where currently the interest rate for the Bank of Japan for the yen is currently at minus 0.1% compared to the US dollar, which is currently at 5.25%. So if you are using your yen to buy the dollar, you're actually making over 5.24% return on investment on that transaction. Now you can see how this has become an attractive window for investors, and of course market participants are taking advantage of this dovish stance to continue buying the US dollar and of course selling the Japanese yen. And factors such as recent devastating earthquake in the central Japan also is affecting this, and declining rate of inflation in Tokyo, and of course weak wage data collectively contributes to the ongoing depreciation of the Japanese yen. Now, adding to these factors I mentioned earlier, the US dollar remains so strong, especially after hawkish comment by the Fed Governor Christopher Waller yesterday night, and these remarks have prompted investors to reconsider and scale back their expectations for a rate cut as early as the month of March, which of course will further bolster the US dollar position going forward. And now with the situation we have here, I'm of the opinion that prices will continue to rise as we anticipate the US retail sales data coming up later today, and of course the FOMC member speeches, which everyone would definitely want to be looking forward to have a better insight into the trajectory of the interest rate cut in the United States. So all factors are screaming bullish for the US dollar against the yen. So, and as a result of this, how do we intend to capitalize on this sentiment in this market? Now, from a technical standpoint, when we look at the structure, I remember yesterday we did acknowledge the fact that market has been bullish, and after connecting the series of higher lows, we have this ascending trend line that has been supporting the recent bullish momentum since last week, Friday. And of course, we know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying this asset. So as it is, price still remains above the trend line, and the only condition that will make us want to start considering selling is for price to break down the ascending trend line. And if you look at where price is at this point, is way far away from the ascending trend line. So at this point, I would not be considering selling at all, instead looking out for more opportunities to buy this asset. Now, if we project this ascending trend line to connect a series of higher lows that started this week, we have a new structure to guide our trading decisions for the week. Now, we saw how price broke out of the resistant line during the later part of the New York session yesterday, broke out of the structure, retested it, coupled with some buy pressure here, broke out of the 147.400 area. Now, let's see if the market may do some retracement back into the ascending trend line, and if it does, then we want to be looking out for patterns like double bottom structures, head and shoulder patterns along the ascending trend line to project another opportunity to buy. And if we do find a reversal pattern, that is, if price retraces back into the ascending trend line, we mark out a neckline, then buy the breakout of the neckline. So that is if price will retrace back into the structure. And in fact, it could also dip into the 147.400, which was broken during the Asian session today, to incite another wave of bullish momentum. And we should also take note that it is not all the time that the market usually come back to retest the structure, but instead it can continue to find new highs after transitioning into an uptrend continuation pattern. So in that case scenario, we are having a buy stop order again above the 148.200 with the attempt of maximizing the bullish momentum. So let's see how the market will play out here. The outlook in this market still remains very bullish, as even if bearish momentum comes in here, like in form of retracement move, we still have bust stops like the ascending trend line, the 147.400, and even this ascending trend line here has a bust stop to inside the next journey for the uptrend continuation. So let's see how this is going to play out in the next couple of hours, and if there is any interesting setup that comes up along the line, I will definitely let you know in the comment section of both my TradingView and Telegram platform, as always. So this is my simple view on the USDJPY. Let's mark out those levels on our chart, as we will be needing them to guide our trading decisions for today. So I wouldn't be talking about any sell potentials at this point, because price is strongly sitting above the ascending trend line. If you have any questions whatsoever as regards to the setup or as regards to my explanation, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the last asset on our watch list for today. All right. While we're waiting for questions, if you have found this session useful in making your independent trading decisions for today, kindly support the project by giving the video a thumbs up, and thank you very much as you do so. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move right into the final assets on our watch list for today. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we have been enjoying a sell position since Monday, I guess. Okay, since Monday, yes, Monday stroke Tuesday trading session. After we did identify, okay, let's quickly run through this and see what is going on at the beginning of the week and what led to the decisions we made. So at the beginning of the week, we had a couple of structures here. The first one was the range where we saw price confined within the $2,058 area, and of course the 2046 to give us a level of uncertainty at that point in time, as we saw price started the week around the 2046, culminated the buy pressure around the 2058, and as soon as price got into the 2058, we saw a barrier where it became difficult for buyers to continue the momentum to the upside. Now, coupled with this range, we had an ascending trend line, which we spotted here after connecting the series of higher lows since last week Wednesday, as you will see here. And of course, we did emphasize that this ascending trend line will maintain the bullish bias. That is, if price continue to stay above the structure, we will continue to look out for buying opportunities. However, we saw price break down the ascending trend line right here on Monday, New York session, and I did updated us during the XAUUSD live window with this newly identified $2,053 area. That was during the New York session. And for those of you who watch my exclusive price action tutorial, we talked about this in that video. So we said this $2,053 level, which interestingly shares a confluence with that ascending trend line, will guide any selling opportunities, as a breakdown retest of that structure will be all we need to confirm a downtrend move. And since then, we have been selling this particular asset, adding more positions at structures such as the 2046 and of course the $2,035 area yesterday. And finally, a couple of hours ago, we also added another one at the breakdown of the 2000 and was $2,022 level to maximize the potential of this bearish move. So far so good. In the last 48 hours, we've had about 4 positions running in profit on this particular asset. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to capitalize on this particular opportunity. Now, as it is right now, I want to encourage us all, since price has moved significantly well in our favor, let's give enough breathing space, move our stop losses, secure the current sell position while we continue to wait for new opportunities. And as it is right now, I will suggest that we give enough breathing space anywhere below the 2035 due to the volatility that could happen in this market. Move your stop losses into those areas and let's see how the market will play from here. Now, with a well-secured position in this market, what is going on in this? What is really going on? I talked about this when I was discussing on the USDJPY on the USOILSPOT, as we saw dwindling expectations for aggressive US Fed rate cuts, especially which contributed contributed to gold's decline. And of course, Fed Christopher Wallace's recent remark further reinforced the reduced outlook for any early interest rate cuts, hereby maintaining elevated US Treasury bond yields. And when there is the US Treasury bond yields increases, it reflects simultaneously on the US dollar, which of course would also increase too as well. And of course, we have seen this reflect on the gold market as well, as majority are dumping the gold and buying the US dollar asset. Now, the combination of diminished March rate cut expectations, geopolitical tensions, and less than beautiful economic growth figures from China has tempered investors' interest in riskier asset. While equity market exhibits a softer tone, the safe haven assets such as gold remain subdued at this point in time. Now, with this scenario, and all the factors we've talked about here, the part of least resistance for gold is more or less to the downside. Now, things are looking very bearish at this particular point in time, but in as much as it looks bearish, we cannot ignore the potentials that buyers could come in. Remember what we said here yesterday as regards to the technical setup on the higher time frame, where we did identify a descending trend line that we said price may come to retest the structure to incite another wave of bullish momentum. So for the sake of clarity, let me quickly take you through the 4 hours time frame so we can all understand what I am saying here. Now, if you look at the structure on the 4 hours time frame, remember what we saw here at the beginning of the week. For those of you who watch my video on the XAUUSD weekend video, of course, you will be familiar with the structure. And if you missed out on it, please, the links are right in the description box below. Check it out after this live session to have a better understanding of how we got to this point. So we had a demand zone between the 2015 and the 2025 area, an area which has been a barrier for sellers since the mid-month of December, as you will see right here. Every attempt by the sellers to break through has always been met with strong resistance from the buyers. Now, since the new year 2024 began, we saw our price had continued to find lower highs in this market, giving us a descending trend line to work with after connecting the series of lower highs. Now, despite the strong bearish momentum since the beginning of the year, we saw how this area continued to serve as a strong barrier, negating all the attempt by sellers to break through the structure. And in fact, last week Thursday, we saw a significant move in price action, breaking out of that descending trend line to the upside. And one of the things I said here on in my weekend videos, and of course during the Forex Morning Mastery on Monday, is that the right question to be asking after citing the continued bearish momentum since the new week began is to ask, when will this retracement phase end? And of course, we know that from a technical standpoint, when price action break out of a key structure such as this descending trend line you see highlighted on your screen, we expect that some point in time price may come back to retest the structure in anticipation of another wave of bullish momentum. And one interesting thing about the retest of the structure is how beautifully it shares a confluence with that demand zone that we identified earlier. So right now we are back within the buyer's territory, and at this juncture we want to ensure to secure all the current sell positions while we wait to see how market participants will react to that zone around the 2015 and the 2025 area, which of course is peculiar with buy pressure in the last 5 to 6 weeks. Now we are at a crucial juncture. You would agree with me. We are at a crucial juncture, waiting to see how the market will retest the structure. Are we going to see a reversal pattern here? Now, if we see something like, let's say, for me, it's looking more like we want to see a head and shoulder pattern sort of a structure. If we see something like this, the next thing we do is to mark out the neckline of that reversal pattern and then buy the breakout of that neckline. But as it is right now, we still yet to see anything significant forming at this point in time, so we shall exercise patience. It could take about 4 to 8 or 12 hours before this whole formation forms, so let's exercise patience at this particular juncture. However, in as much as we are expecting a retest of structure to incite an uptrend move, we cannot ignore the fact that the bearish momentum we've been witnessing since the beginning of the week could be further fortified if price can break down this demand zone for the first time in the last 5 weeks. So if we can see price take out the $2015 area, which happens to be the lowest point of that demand zone, then at this point price will have taken out all the buy positions to give way for new selling opportunities. So a breakdown of the 2015 will welcome new selling opportunities here, and in fact at that point price will be back below that descending trend line that has been supporting the bearish momentum since the beginning of the year, hereby welcoming price back into the seller's territory. So let's see how this is going to play out. Today we are at a very crucial juncture where we are looking out for reversal patterns like double bottom structures, head and shoulder patterns of falling wedge to join a bullish momentum. And in fact, if price will break down the 2015, coming back below the descending trend line, then we will be in to add more sell positions to our existing trades. So I needed to share this with you so that you can have a better understanding into what is going on here. So as it is right now, we shall continue to look out for selling opportunities, of course, until the market structure states otherwise. And like I said, we look out for reversal patterns on the around that area to capitalize on the next move. So the lowest point since last week Thursday is the $2,013.50 level. So I want you to mark out that level. If price can break down the structure, we will look out for more selling opportunities. So breakdown retest will welcome more selling opportunities in this market. So let's keep our options open, and as it is, if we see reversal setups, trust me, I will give you updates to give you an idea of where we shall be entering the next move. So these are my views on the XAUUSD for today. Remember, secure your current sell position while we wait to see how the market is going to be reacting to this area between the 2022 and the 2015 and the 2025 area, which happens to be the demand zone we identified on the 4 hours time frame. So if you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 10 to 15 seconds off, see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. And please do not forget to give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them, and of course grow the community too as well. Thank you very much as you do so. So let's see if there are any questions, and then we shall go ahead to round off. All right. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we shall be rounding off on today's Forex Morning Mastery. But before I do, I just dropped the link to the XAUUSD live window right in the comment section. So you want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who do not know, the XAUUSD live window was born out of popular demand from members of this community, where we come together on a daily basis to monitor real-time price action on the XAUUSD asset during the New York session. It usually kickstarts about 5 to 10 minutes into the New York session, so you do want to be part of that session as we run through the real-time price action on this particular asset. So I look forward to seeing you guys right there. And it's on this note, I will call it a day here. We were able to take on 3 of the major financial assets on our watch list, which includes the USOILSPOT, the USDJPY, and finally the XAUUSD, all of which we were able to identify simple trading setups using basic tools such as trend lines, key levels, and chart patterns only to position ourselves strategically for the next move. And I do hope you marked out these levels on your chart, and if you do, I encourage you to exercise patience and allow the structures to mature before jumping into any positions today. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And as a result of this, you do want to be having a well-defined risk management strategy in place to ensure that you mitigate your portfolio against any sudden risk. So with this understanding, I encourage us all to follow through. For those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from this session. If you do, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gather in this community to make your own independent trading decisions. And it's on this note I want to wish us all the best of luck. I look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare for tomorrow's trading session. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.